By continuing to access this site, its content, or establishing any contact with Elliott Wave Live, you acknowledge having read and understand all disclaimers and risk disclosures. The following information described within this video or blog post contains information pertaining to hypothetical trades. These trades were not executed and are for educational or illustrative purposes only. Please read the CFTC Rule 4.41 that's on your screen, and keep in mind, by continuing to use this site, establishing any contact with its author, and or clicking on any of the links, you acknowledge having read and understand all the disclaimers and risk disclosures contained within my blog site. Hello, my name is Mike Sinibaldi, and welcome to this week's video edition of Heard on the Street. In this edition, I'm going to take a look at the following markets: the S&P, Nasdaq, crude oil, and copper. This week's analysis is all about being prepared, as I don't think there is any clear-cut answers right now. With the conclusion of September, the monthly chart level shows the similarities between the 2007 and 2011 decline. I've purposely taken off the wave ladles to show that I can visualize a head and shoulders pattern, given that the 2007-2011 analogy calls for a new low, followed by a relief rally, then a precipitous decline. At the weekly chart level, both the 2007 and 2011 tops have progressed 21 weeks as shown in the highlighted boxes. Should the analogy continue to play out, more selling is expected for 2 weeks plus or minus a week. Several areas of fib and structural support come into play at 1057, 1037.25, 1016.50, and 1006. While the analogy calls for further selling, I am cautiously starting to think about being bullish. Let me explain. Notice that I have overlaid the MACD predictor on the weekly chart level. For the week ending 10/7, price would need to rally to 1229 in order to create a MACD buy signal. So odds are that by week's end, we will not have a confirmed signal. The indicator will eventually signal a buy, as it did in 2007. So why would I be cautious? Well, the E-mini and the euro correlate quite well, and following the euro has kept you on the right side of the trade. Currently, both markets are falling together. But at the monthly chart level, the euro will signal an MACD predictor sell on Monday morning if the market does not open above 140.42. While I will not show the charts in this segment, several other markets, including crude oil and copper to name a few, have already generated monthly sell signals and precipitous declines. Needless to say, unless this is a fake out, the euro's wave count already calls for a decline to reach 108, where wave Y equals wave W. With that said, it's hard to believe that any significant rally would be in the cards for the ES, given the fact that the E-mini S&P would remain correlated and follow in lockstep fashion, unless the EU lowers rates. The wave count from wave 3 low is very much unsettled. There are several counts that remain, the first following the 2007-2011 analogy. Frankly, I don't like the price action from the wave 4 crest. It's too choppy, and it doesn't satisfy the requirements of an ending diagonal. Yet, I'll give it some latitude, but price must remain below 1190 for this scenario to remain valid. The second count is one that I have not shown to date, but may be the answer in explaining the lack of impulsive behavior from 1229.75. In this count, wave 1 is already in place, as it may have been in 2007, and wave 2 is an expanded flat. A, B, C, 3 waves up, 3 waves down, followed by a rally in wave C to complete wave 2. Under this scenario, I will be watching 1065.75 and 1046.25 for the termination points of wave B. And finally, a third scenario attempts to explain the less than ideal price action, where either wave 4 is still unfolding in a flat correction, or wave 2 is unfolding in a flat correction. In both scenarios, prints below 1106.75 negate. In conclusion, 2 of the 3 scenarios point down in the near-term basis, so I'll be looking for further declines in this market. However, Keep an eye on the euro. Look for follow-up analysis in Monday's Market Pulse. The next market that I'll cover is the Nasdaq. At the weekly chart level, Wave 2 is now complete, and I'm looking down in Wave 3. Preliminary targets are 1559 to 83. Turning our attention to the daily chart level, we can see that Wave 2 unfolded as a WXY and terminated near the .786 retracement of Wave 1 of 2335.50. Minute waves 1 and 2 are now complete, and I'm looking lower in this market. Prints below 2108.25, the Wave X low, and a break of the lower boundary of the price channel would bolster this count and confirm that Wave 3 was indeed underway. The next market that I'm going to cover is crude oil. At the monthly chart level, the MACD predictor has generated a sell signal. The count suggests that price should fall hard. At the weekly chart level, I'm working a series of 1-2s. While support is just below the market at 74.19, I don't expect it to create any significant bounce, as Wave 3 of 3 are usually violent affairs. Structural support comes in at the Wave B circle low of 67.15. My preliminary target for Wave 3 is 50.22. The final market that I'm going to cover is copper. At the monthly chart level, this market also exhibits an MACD predictor sell signal. The 2-4 trend line has also been broken, signaling a change in trend, a good sign supporting the Wave 3 Grand Supercycle top. At the weekly chart level, a challenge of the 0.5 retracement appears imminent, and at the daily chart level, prices have now pushed beyond the lower boundary of the channel, retested it, and failed. In my initial assessment of this market, I was looking for Wave 3 circle to end at 305.50. Given that intermediate Wave 5 appears to be incomplete, there's also the possibility that Wave 3 circle equals a 2-point multiple of Wave 1 at 278.50. Supporting this lower projection are the subdivisions at the 240-minute chart level and the fact that intermediate Wave 5 would equal a 0.618 multiple of Waves 1 through 3 at 272.20. The subdivisions of Wave 5 are currently exhibiting overlap and require an ending diagonal pattern. Should this not develop, a more complex Wave 4 may be developing. I'll leave it at that for this week, and I hope you found this video helpful, and best of trading.